Should you buy a house now or should you wait? I feel like that is a question that's being asked by a lot of people, either externally or internally in their own mind as they're weighing that option. What do I do? There's a lot of uncertainty. There's a lot of noise out there telling people to wait for years. Some people saying buy now. You will never tell me to buy now or wait for everyone because I don't like to make blanket statements. However, in this video, I'm going to break down what it looks like to buy now versus waiting. And then you can apply that to yourself and see what makes sense and what is the best option to protect you and your family when it comes to buying a home. Welcome back to the channel. It's Rich Brecklin, your Arizona real estate agent. So buying now or waiting. First, we got to look at the current housing market. And the housing market as a whole, again, it's all over the place depending on where you're getting your data from. However, real estate, like I always say, is hyper local. So we're going to show you, or I'm going to show you, not we, I don't have anyone else here in the office with me, but I'm going to show you what the numbers actually look like. So like so many other places, we are dealing with an inventory issue. And in my opinion, and more than opinion, in fact, that is what is keeping this market alive and moving forward and not dropping because of the rate increase and everything else is going on in the economy. What I'm going to get into later, but real quick, our active listings are down. You can't see it here, but active single family detached is still below 11,000. Now, for context, in the peak of the market when during COVID, a year and a half ago, we were around 2,800 single family detached. So it was crazy. And then in the fall, we were just under 18,000. So we're under 11,000 right now. We should be around 20,000 plus, maybe up to 24,000, give or take. But that's where we're at. So we still don't have enough homes. And we look here at pending listings. That is up from last month and up from last quarter, almost double, but not quite. But again, down from last year and 2 years ago. And listings under contract is also up from last month and last quarter. Last quarter, we really saw kind of the effects from the quarter prior, that lagging indicator there. And a lot of these are lagging indicators, but I like to use the data and numbers that I have at my disposal. And then, put that together and then hopefully inform my clients the best possible way so they can make a great decision. Days on market has dropped again. Days on market active, hang around the same. And then active supply, but monthly sales per square foot has gone up the last few months. And that's a number I've looked at quite a bit, especially when people say, oh, the market is crashing, prices are dropping. Well, they were dropping here and they did drop in the fall. However, January, they started to rebound, which is crazy, even though rates went up, even though we had a rate pullback, then back up. But home prices here continue to go up, and our average monthly sales price is up again at $543. Median is also up at $519, so right around, or $419, so right around $420,000, $545 on average to get you into a home. And that Cromford Market Index, remember, above 100 is seller's market, below is the buyer's. We are up again to 135.8, up from last month, up from last quarter. So does this mean that it is a strong seller's market and buyers are screwed? No, it does not. Now on paper, yes, but it's not that seller's market that we think of, that we went through, in 21 and 22, where every home is getting multiple offers. And that is simply not the case. Now, homes are getting multiple offers, but not as frequently. It's also more common for buyers to get a seller concession. But while you're here, should you wait? Should you buy now? And that's what we're going to get into with Robert Shiller. Oh, Bobby, he is a Yale economist. I am not. I'm just a dumb homicide detective turned realtor who likes to put together data and research and advise my clients. So if you're looking for an economist, a strong financial advisor, that is not me. And I will fully admit that, and I will not try and confuse people to think that. Not that you would with my extended vocabulary, which you'll hear on this channel. So what does he say? U.S. home prices still look very high, according to Bobby, and they are. Even though they did drop from last spring, they're still really high. They're still well above what they were pre-COVID numbers. And then maybe if you have a good chance to delay your purchase, it might be a good time to do so. And I'm going to circle back to that and why I think that might be a good option. I know my other realtor colleagues who say it's always great, buy now, and try and swing it and cherry pick data. I'm going to go back to that and explain why that might be a good option and maybe why it shouldn't. And Schiller also added that he's expecting the U.S. economy's struggles to continue for the next 6 months. That makes you feel good. So U.S. steel prices still look very high. So potential buyers should consider delaying their purchase for another 6 months, with the economy's struggles likely to continue. Now, let's hope that they work themselves out after 6 months, but who knows? I mean, just with if we have another bank fallout, then is the government going to bail out a bank? FDIC doesn't have enough money to cover the funds, and then are they going to print money and the dollar weakens again? That's I can't answer that. That's for sure. It says it's easy to forecast the short run in the housing market. If you're a long-term buyer, it is not clear. Home prices are very, very high by historical standards. I would extrapolate the downturn somewhat. It's going to continue, he added. Maybe if you have a good chance to delay your purchase, it might be a good time to do it. It might get a little cheaper after another 6 months. And you know what? It might get cheaper. I'm not sure what is going to happen. If we start seeing more and more inventory hit the Phoenix metro market, then yes, full on prices are going to drop. Now, like I said, the trend we've seen lately is prices rise, despite the higher interest rates from what people were used to, a few years ago, even last year. Well, we just don't have enough homes. So if we start seeing homes increase on the market, then the prices will drop. They'll have no other option because price fixes everything when it comes to real estate. So that is a key number that I'm paying attention to daily. The S&P CoreLogic Case-Shiller Index, which is based on Schiller's own analysis of U.S. housing with fellow accountant Carl Case, shows that home prices fell 6 months in a row between July and December. Now here in Phoenix Metro, we did start seeing a pullback. We peaked in May and June, rates went up, and then we saw that drop. We went to an average of 600 all the way down to 510 relatively quickly. And that's when people were saying, oh, the market is crashing, it's tanking. And I saw a huge opportunity for some clients there. We got some great incentives that people get 4% seller concessions, a ton off of the original list price. But when you look at it in a bigger picture, take that 10,000 foot view, it is still much more expensive than what it was 2 years ago. But is that just how it's going to be from now on? Are those prices going to drop to pre-pandemic levels? Now, rising interest rates have helped fuel the housing slowdown. The Federal Reserve has lifted borrowing costs from near 0 to around 5% over the past year. That's pushed the national average 30-year mortgage rate to just below 6 or 7%, according to Bankrate. Now, right now, as we click over here, 30-year fixed is at 6.59, 15, 6. Everyone's around a 6, give or take. An ARM, who in the right mind is doing an ARM right now? So that is just where we're at. Now, I've also heard that rates, Mr. Powell has every intention to raise rates. Rise. See, I told you, it's cop language. I cannot make a sentence. But rates are going to continue to go up. So we'll see if that trend continues. Again, maybe we'll have another bank crash and rates pull back like they did the Monday following the prior one we just had. Now, when there's an economic downturn, unemployment is likely to go up. That reduces the number of Americans who can afford houses and stops landlords from rising rents. That's the capitalist system with a central bank, he told CNBC. And yeah, so if we start seeing unemployment and we start seeing, capital becoming more expensive and we start seeing layoffs, and we've already seen it with Amazon and Carvana and other tech industries, if we start seeing layoffs in those sectors, then we're going to see the layoffs. We're going to see, restructuring of people's income. And then that's just going to create a cycle. And I don't expect it to be a fast thing, maybe faster first, and then slow down and then continue to fall. But the good thing is there are going to be signs. So there's going to be signs if you are a buyer or a seller, or if you're just thinking about it. And then this article, and I posted this on a video the other day, but I just want to touch on this chart here, the disparity between the east part of the United States and the west. So here in Phoenix Metro, prices fell January 2022 to 2023. And yes, we've had an uptick in home sales price. we're also, a negative appreciation from last year. But when you look at that, so yes, we have fallen, but that benchmark has already been up so high, and the prices are always, I don't say overinflated, but overinflated for what homes are selling for, even though they've fallen. And let's pretend like they didn't go up the last few months and pretend they continued to fall. They're still well above the pre-pandemic numbers. So they could use a good, down a peg or two, or three or four. But what does that mean? Does that mean you do wait? Do you buy now? And I think it comes down to a lot of different things. One, can you afford the monthly payment? Don't go into a home thinking you're going to refinance. I'm like, oh, I'll just get, when it goes down to 3% again, I'll just refinance. Well, that may never happen. Can you afford the monthly payment today? And then why are you moving? Are you relocating to Phoenix Metro? Are you just buying because, and you're going to stretch, it's going to stretch your wallet? Well, I would say do not buy right now. If you're relocating here for work and, or you absolutely love it here and you have the means and the funds to do it, to be able to afford it, then that's a different situation. But if you're looking and you're, having to, scrape by to make ends meet, it may be a better option for you to rent or to stay where you are. So the last thing you want to do is get to a spot where one thing goes wrong and now you can't make your payments, especially with the cost of everything else going up. And I've mentioned other videos with consumer debt, credit card debt, auto loans being all-time high. That's going to affect a lot of people's buying power. And then we look at rates. What are rates going to do? If they're going to continue to go up, when do they start to fall and pull back? And that's why I pay attention to these numbers daily. I report on them daily. I advise my clients of the same. So what trends are we seeing out there? What are we seeing in the 10-year treasury, the mortgage-backed securities? What is going on with unemployment? What is Powell saying? Where are rates going to go? And then what are your long-term plans? Are you planning on staying in the home for just a year, 2 years? If that is the case, I would not buy. I would wait. I would see what happens, and it may not make the best choice. So again, I like to say this, don't day trade real estate. Not now, not in this economy, not in this housing market. There's too many uncertainties. So it really comes down to, and I know it's, I can't tell you buy now, wait, but waiting may not be a bad option for you if you have the time to do it. The patience, which is, here, I feel like people just don't have patience. Everyone wants it now. But if you don't have to make the move today, then waiting may not be a bad option to see how things play out. Let's say you do wait and nothing happens, nothing changes. Well, what did you miss out on? Right now we're under inventory homes. And yes, it is a seller's market on paper, and you do have some more power because I think there's uncertainty on the seller's side as well. But waiting, I don't think it'll hurt you to necessarily wait. Other than if you see the home you absolutely love, you absolutely have to be in it, then maybe you lose the risk of losing that home. But as I've mentioned in the beginning of the video, right here in Phoenix Metro, prices are continuing to rise. I don't think they're going to get to where they were last spring, where we were almost at $600,000 on an average sales price. So I don't think we're going to get there. But right now, they're continuing to rise. But as I keep an eye on inventory, if inventory starts to go up at a higher level, then that price is not going to be rising at the same rate. Now, if we start losing homes like we have been, well, price is going to rise, and maybe it does make sense. But yeah, it's hard to say because I don't like making a blanket statement when it comes to should you buy now or should you wait? It depends. It depends on you, your situation, your goals, what you can afford, and what you want to do. Now, if you are looking to make the move to Phoenix Metro or at least have questions, send me an email, give me a call, follow me on Instagram, and happy to talk, happy to have a conversation, see how that works for you and how we can be of service. But it's Rich Brecklin, your Arizona real estate agent. Watch this next video, and I'll see you next time.